Welcome to the Future of Supply Chain, presented by Dynamo. Each episode, we sit down with leaders in the industry as we build the future of supply chain together. Let's get into the show. Here's our host, Santosh Sankar.
Hey folks, welcome back to the Future of Supply Chain podcast. I'm your host, Santosh Sankar, and joining me today is Steve Sloane from Menlo Ventures. Steve, welcome.
Hey, thanks for having me.
It's great to have you on, and Menlo Ventures is a household name, obviously, in the world of startups and VC. Have had a very tenured history, right? 45 years, $5 billion under management. And I learned earlier this week, have had 80 companies go public, which is pretty badass. I had no idea.
Yeah, that's I don't know where you got that stat, but I think that's right. I think it's the benefit of being in business for a long period of time. You get to see a lot of different things.
Indeed. So I'm super excited, and you're one of few VCs who sit on a broader seat to scale platform and really kind of think about and care about supply chain. So I'm really excited to dig in. But with that, let's go on a journey on the time machine. How did you get into investing in supply chain startups?
Yeah, so I had actually studied mechanical engineering in college, and I had a minor in robotics and intelligent systems. Had made the transition to investing, so never actually got to work in industry, but still always had an interest in the space. And back in 2017, actually did a deep dive in the robotics space, and kind of masqueraded as someone who kind of knew what they were talking about on the tech side. At the time, really focused on a lot of the warehouse robotics. We ended up investing in Six River Systems, which was acquired by Shopify. And, it was just really through that lens of that investment that I really started to see some of the opportunities and the issues in the supply chain. We had gone to a Six River customer, and, they were telling us that there was like 50% labor turnover in some days, actually, in the holiday time. And so, really felt to me like, hey, there's this industry, and, obviously robotics in the warehouse is kind of just one narrow slice of what's going on. But there's going to be so many other challenges and opportunities that technology may be able to help with. And so that kind of set me on the path to, investing in supply chain, having continued interest in its future.
That's awesome. So, stepping ahead here, I think on our last catch-up call last month or the month prior, we discussed some of the psychology behind the current interest around AI, right? And I probably went on a rant, despite all this, track record we have around companies using AI in products and businesses around supply chain, we're kind of seeing this sudden behavior, right? As if like principles of AI had never been applied into the world of startups before. And since then, I've been kind of reflecting on this, and where I got was, the last decade was all about applying AI into blue collar work environments. You mentioned warehouse robotics, for example, right? A deep underpinning in that are, different mechanical, electronic, vision, but equally different applications of ML in order to really bring AI. And now I'm wondering whether kind of this emerging wave is AI in white collar work environments, probably environments you and I occupy day to day. And I'd be curious, kind of, how do you parse this environment with regards to this interest in AI?
Yeah, it's an interesting time, and I think you brought up some interesting points. So, at Menlo, we kind of firmly believe generative AI is one of those transformational technologies that's kind of on the same scale as mobile, cloud, or the internet. But I think the thing to keep in mind is, if you looked at all these waves, there's a lot of false positives early on in the life cycle. So we've already, I think, started to see a shakeout in some of these early generative AI investments, that were built on top of the core LLM. What's their defensibility? How do they kind of continue to innovate as competition comes in? And so, in terms of parsing that environment, like we're just very actively investing in the space, but at the same time, we think it's a 10 plus year super cycle. And, it's important to not jump the gun on some of these things. So, candidly, I think the market has probably been a bit overheated in that area, as you allude to. And, I think we'll start to see over the next couple of years, just, a little bit more clarity around what the opportunities are, and a little bit more kind of rational entry prices, as these companies kind of start to get valued as all companies are ultimately valued, which is the eventual opportunity to generate profits. And whether that's kind of a revenue multiple in the near term, which it often is in VC, that will kind of more closely align with the way we've kind of invested in other companies, as opposed to like, hey, it's a generative AI company, let's give it a 80% premium, because frankly, all companies will be using generative AI in their applications.
Yeah. So, one of Menlo's major investments around AI is Anthropic. And you're kind of sitting on this unique team where you're exposed to different people thinking about the world in different ways. And you've alluded to this as you kind of discuss the broader firm's philosophy. But I'd be curious, kind of from your vantage point now, as you now apply this to supply chain, how do you look at and evaluate, parse through opportunities that sit at the intersection of AI and supply chain? Because I don't think a whole lot of people can kind of speak to this from such a vantage point.
Yeah. So one of our partners, Tim Tully, he was the ex CTO of Splunk. He leads the charge on a lot of these kind of technical evaluations. He's just very deep in the space, including things like Anthropic. He led an early investment in Pinecone, which is the leading vector search database company. I think evaluating investment in kind of AI meets supply chain, we'd look at it in a lot of the same ways that we'd look at other vertical industries or even horizontal industries. Like, hey, how do we evaluate the attractiveness of generative AI in this sector? So just to give you some of those characteristics, one, how do we think about the industry vertical? I think supply chain is something that we do find to be quite attractive given, the size of the industry and the number of manual processes. Legal would be another one that I think has been squarely in the crosshairs, where we think the technology will be transformative. And then we're thinking through things like incumbent advantage, like how differentiated is it from the core incumbent system of record? I think Microsoft is going to be a very formidable competitor in a lot of these horizontal use cases. We look on the data side, like, does this company have access to a set of proprietary data that's going to allow them to kind of fine tune models in a unique way over time? The technical team, kind of are they innovating? Value for the worker, right? We'd see some of this in like robotics or other areas, like, hey, just, very high value, hard to hire workers, this kind of thing helps. And then, finally, we're still looking at things like workflow and, not just the technical piece, but are there kind of the core workflow differentiation advantages that exist in this company besides, some claim to a uniquely fine-tuned LLM. So we would take that framework and use it pretty consistently across, a number of different areas, including supply chain.
And you mentioned two interesting things there. One, like competing against a really scaled out behemoth such as Microsoft, but then two, also the point around proprietary data. And I'd be curious, kind of, how is this going to play out with regards to defensibility and actually kind of owning your advantage on the product side? Is that obvious to you yet? Or is there still kind of the risk that some of this might actually fall on the core LLM model, or somebody like Microsoft who's providing the infrastructure and capability to build the business on the back of?
Yeah, I think it's it's kind of the fundamental question in a lot of ways, when you invest in these companies. And it's kind of, put it another way, it's like, hey, how much of the value is going to accrue to, specific applications versus, hey, the kind of core LLMs, and are those going to be super horizontal, or and can kind of train quickly, or they're going to be kind of vertical use cases that build a lot of value. Ultimately, there's going to be a ton of vertical and specific use cases. The same way we've kind of seen in cloud, I think, which is, you get a few really large players on, the model provider side. And then, you just have kind of an explosion of value across industries, whether that's unique data sets, whether that's workflows, whether that's some combination of the two. That's certainly, I think, still going to accrue a lot of value in the coming years.
Sure. I think it'll be interesting to see and learn kind of how that all unfolds economically, as business models, I guess, prove or disprove their viability. Um, and I guess I kind of have to ask this question to a degree. Where do you see generative AI having applicability in supply chain?
Yeah, I think yeah, supply chain is a good one. There's just so many manual processes, and so much kind of data that sits in different systems. Especially say in logistics, freight, both domestically and internationally. So one of my companies, Parade, I think is tackling that domestically. They have a new product for brokers called Co-Driver, and so much of that their workflow is responding to emails, taking phone calls, pricing routes. And these are some things that are just very well suited for generative AI, because you can ingest the data, you can see patterns over time, you can respond quickly and kind of fine tune on that data set. And that's just going to free up the broker for higher value customer relationships and service, as opposed to just kind of trying to parse through their email and missing 50% of the opportunities. So I see it there. I see the same thing for kind of international commerce, all the bills of lading, custom entries, AP automation. There's just not enough people to do these things. And I think generative AI is going to be really ripe for that as well.
Love that. Love that. So it's kind of seeing this co-pilot UI UX paradigm really becoming more prevalent across different enterprise workflow use cases, if you would.
Yep, for sure.
So with that, we're in the middle of this kind of venture environment, venture cycle, where there's an increased call for efficiency, capital efficiency, especially amongst companies that are scaling. But AI products aren't necessarily inexpensive to create, build, and scale. And I'm wondering, like, how should founders reconcile these two things that feel like they're coming from very different vantage points?
Yeah, I mean, clearly there's been a lot written, and a lot just put out there on how investors are looking for more profitable growth. And I think every company is now pretty cognizant of their burn ratio, which is just how many dollars they're burning for every new dollar of ARR. And we went from an environment in 2020 and 21 where it was kind of growth at all costs, and now it's like, hey, how do founders kind of find that optimal path on the curve where they're still growing quickly, but they're burning a reasonable amount of money to achieve that growth. I actually think AI is going to be helpful here. I think we're starting to see some enormous advantages in terms of engineering productivity. You talk about Copilot and these sort of things, and some teams just being able to do more with the same number of folks, and then also getting spun up with AI. I think now you can just kind of call an API, right? You can work with Anthropic or OpenAI, as opposed to building an entire in-house team of data scientists, which was extraordinarily expensive. So I would say like, hey, I don't necessarily think they're kind of in conflict. And I think, teams that are leveraging AI, not just in the product, but also like on their internal workflow sides to just become more efficient, will be able to do both. So, yeah, that's kind of how I see it.
What's kind of the most novel thing you've seen any of your portfolio companies do with regards to using generative AI for like internal ops, to your point, rather than product? Is anybody doing anything interesting or novel in
Yeah,
your
I've seen
opinion?
some pretty cool stuff just around document processing, which is, hey, where are the various things that come in, to either your customers or, internally. It's like, hey, we have a ton of bills coming in, and, some of the same technology that's attractive, like that you would sell to a freight forwarder, like you could almost build in house, and like all the kind of bills and things you get coming in, are routing to the right department, are kind of doing diffs, are understanding, hey, what should be paid, what should be, given for further review. So, I think there's some pretty interesting and novel processes, especially in some more operationally intense companies, that have been leveraged, with generative AI.
Yeah, it's interesting you raise this because we hosted our portfolio day over the summer. So we had about 20 of our pre-seed, seed, Series A founders share in one session how they're using generative AI for internal operations. And the one company has a very implementation heavy product. So there is a meaningful lift on the front end, but they tend to sign like 3 to 5 year contracts on the back. But part of what they've done is all of their support for their premium tier, they've actually strapped an LLM on the front. So their CS now can scale more efficiently. And I think they say like they can have a couple CS reps to kind of deal with everything. And they don't need to bother the sales engineers or engineers that used to help with sales, rather. They can focus on core product.
Yeah,
So
that's
yeah,
great.
I think you raise a really, really interesting point there. How does this work in the context of robotics, right? You're one of the few VCs out there who continues to be keen on investment in robotics, has had success in this sector. But how do you think about capital efficiency, growth, moving the ball forward when you're talking about an element of robotics inside of a business?
Yeah, I mean, I think for robotics right now, a little bit less focused on kind of the tech side. I think a lot of the advancements in generative AI, we've kind of seen, these large language models are very good at, ingesting large volumes of data and text, but there's some vision advancements and other things that can be helpful in robotics. But I look at it a little bit less in robotics as kind of like, hey, we need the next breakthrough in tech, and more so like we just need more profitable service delivery. And we're in a transition period for robotics where, as you say, we're still very positive on them as a sector because we think there's kind of a very long period of just labor shortages and need for the US to even get on par with some other Asian countries and others in terms of our level of industrial automation. So I think that's all very positive. But robotics companies need to figure out is like, hey, how do you get out of very long pilots and kind of very capital intensive models and, low gross margin, kind of heavy service delivery. And so, when I look in the context of robotics, I'm like a little bit less focused on, hey, where is the AI leverage, and a little bit more focused on like, hey, where are these next generation of robotics companies that are really going to be able to prove out, some of these more scalable growth models. And maybe they're one and the same, and I'm kind of discounting, how much, tech will help that. But I think, to your point, the kind of environment that we're in, which is calling for increased capital efficiency, will be a forcing function in some ways for the next generation of robotics companies to be able to scale efficiently.
That's super interesting. So I guess also leaning into that a bit further is it's almost a bit more about go-to market and getting something that's economically repeatable and scalable. Because at least the inning we're at, we kind of think we have the technology. Where there's a gap is the bringing it commercially to
Yeah,
market,
yeah,
and maybe they are tied at the hip to your point, but need to demonstrate sales over technology for the time being.
yeah. I think that's kind of where my head's at, and a little bit of just my personal bias.
We definitely have Series A, Series B founders listening in here. How should they think about best demonstrating the moat around the AI capabilities they've built when they go to market? What are certain things or patterns you pick up on or look for?
Yeah, I think you brought up a good point, which is, hey, how do we even know exactly where the moats will be, and how this will play out? And I think the answer is like, no, we're not kind of totally certain. And so, especially for kind of vertical supply chain, these sort of things, the proprietary data will help. I think, having a sense of like, hey, what do you see that others can? And, how does that kind of allow you to tune models in an interesting way? I think should be part of every pitch. But yeah, more important in a lot of ways are just like, kind of traditional metrics for success, right? Like instead of getting ourselves so twisted up on, where's the moat or what's defensible, like, great workflow, happy customers, strong vision. Like we've just seen so much value accrue in SaaS companies that, have probably not had super strong moats over the years. And, I think the same thing will apply here for sure. And, the kind of generation of the next generation of AI investing.
And I guess pulling on that thread, do you increasingly believe that enterprise SaaS and AI kind of just become this thing where we no longer talk about cloud and SaaS? It's just like we assume it's one and the same. Is that where AI feels to be headed?
Yes. Yeah, totally. I think it's just like you don't see a ton of on-premise software companies being built these days. Right. It's just, cloud is kind of a foundational technology, and I think generative AI will be the same thing. Every company will have it in some way.
Well, with that, Steve, I'm going to bring it home here with my last question. And what question should I have asked about this topic that I didn't?
First of all, I think you covered it quite well. I think that, the one thing that we kind of touched on, but maybe you didn't, is just like, what are the incumbents in supply chain, and what are the advantages that they may have? Is it going to apply? We talked about Microsoft and hey, potentially the difficulties of going head to head with them in a generative AI category where they have distribution. Is it going to play out similarly or differently in supply chain? Are there kind of large incumbent TMS systems who will sort of crack this? Are there other things in freight forwarding land or others, where the incumbents will have a lot of advantages? Or, is it kind of fragmented and, early enough in some ways in terms of tech adoption that you'll have a lot more opportunities for kind of disruptors versus incumbents in supply chain? I don't have a great answer for you. I mean, I think in some ways, just by the very nature of where I'm investing, do believe there's kind of unique opportunities for disruptors in the supply chain, but just kind of one interesting thought to leave you with.
That's awesome. No, Steve, this has been great. I appreciate the candid nature with which you approach this and investing, and really kind of look forward to finding some good things for us to both collaborate on here.
Awesome. Yeah, this was fun. Thanks so much for having me. It was a fun discussion.
Thanks for watching. Follow us at dynamo.vc for all the latest episodes. We'll see you next time.